What's up, guys? It's Flash back with some more charts and another video. Today's Tuesday, August 6th, about 5:30 p.m. Eastern. Wanted to make a quick video to remind myself and also remind you that there's a much bigger picture play here. And so I know uranium has kind of gone down, it's been ugly, but I think in the bigger picture, this is a much bigger structure, and I'll look at that in a second. But first, I want to cover some bigger trends here. So, what you see, the white line here is the price of gold, parallel channel. Now, I'm going to add on here the ratio, gold measured in the S&P 500, and so you can see these horizontal breaks on the chart where gold breaks out against the S&P and goes on an incredible run. You know, a true bull market in commodities driven by gold outperforming the S&P 500 requires a lot of those capital flows. So you see here in the gold to SPX ratio, like it kind of bottoms and it does a more of a rounded bottom. You know, over in the 70s, it kind of shot up a little bit quicker. It wasn't as rounded, but in '01, you see it was rounded. There's a clear breakout of a horizontal and then a vertical. And so what we have here in 2024, I think, is just a bigger structure of that in play, right? There's a big, looks to be a rounded bottom. Looks like we're breaking out of that horizontal or poking our heads above it. And honestly, that vertical line, I think, it looks like the top of that base, right? So this is going to, I don't know, by the looks of this chart, it makes me think this is taking so much longer than really anyone anticipated, at least in my perspective, right? So like this still has to, I don't know, this could still chop sideways. It could, gain some strength as it did back here and go up quicker. But hey, this is the sign we want to see for gold to now entering a commodity bull market, right? And so let's add on here the S&P 500 in the blue line. And you see the S&P kind of takes a break when this happens. It goes sideways. Sure, it goes on a run here and there, but really it looks like the capital is flowing heavily into gold, right? And so there's also these horizontal lines on the chart, with the blue line. Once the S&P breaks out and breaks that high, that's looks like when gold tops, when that ratio tops. Over here, S&P broke out against, its overhead resistance, its double top, and that marked the top for gold and this ratio as well. So, when that time comes, I think we're going to be able to put some trends on the ratio, kind of like we are here. We'll have the S&P trend, we'll have the gold trend, kind of like that. And if that breaks, if all that breaks and the S&P breaks out, I think that's more or less the top. A top, I don't know. It could, we just don't have enough data. We're not there yet. So we could see the S&P start to take a break, but I think gold and the S&P will continue to kind of battle it out here at the bottom of this base. They'll still either both go up or they'll both go down. But in the grand scheme of things, gold is really starting to take the wheel. But it's a big turning of the ship, which looks like it's going to take at least 5 years. Maybe less. So that's the bigger picture. So now let's add on CCJ. Light blue line. And you see what CCJ does when gold takes the wheel, outperforming the S&P 500, or at least what it did back in the early 2000s, right? It had a big dip there, and we had already broken out down here with the S&P, with the gold against the S&P. Big dip still down in CCJ. Like, that dip definitely scared everybody out. Like, it had to have, right? So it looks like we're dipping now. It doesn't look like we're at the same part of that ratio. We still have to do some work. So I think this is kind of a bigger structure, much bigger thing going on here. And so there is going to be some volatility. And unfortunately, that's what we have right now. Like if we pull up URA, well, let's look at CCJ. Why not? So, I mean, we could very well come down and retest, 29.58. We're out of this channel. That's clear as day. But, we lost some trends back here. I've said this before, we lose trends But we just got to, I think, trust this bigger ratio at play. Like, this is coming. This is a tidal wave that really can't be stopped, I don't think. So in my opinion, like, this is a long-term trade for CCJ, and you can acquire more shares when the price goes down, assuming you believe in the bullish thesis, right? And so there's a thesis about uranium energy, but there's also this thesis about ratios and technical analysis that I think has some validity. And these charts are just they're so massive, it's almost tough to comprehend, right? So I would say, like, the point I'm trying to get across is we need to have the bigger picture in mind. Buy the dip. And, when we zoom in here on CCJ, we'll go on to the weekly. Now, I think we're going to have to correct. We're going to have to do some sort of correction here. 3-wave move, maybe it's 5 waves, but this is also going to take some time, I think, on a macro. This is on macro scale. So, let's be on the lookout. We'll zoom in a little bit. Like, we haven't even gotten that first A, that first low. Just kind of giving this a quick look. But break of trend, like, we could come down here and just test this, make a lower low, and then be off to the races, right? That's the macro play. And I think we got to look for those ABCs. We'll see them. They start to show themselves up, even to the upside, right? Like, this was an ABC to the upside. We could start it wherever. Made a higher high. Took out this A. And you're probably going to see it retrace. I'm thinking this structure at least. And so that would either come down to the 0.5, which we're just about tapped, 0.618, somewhere in this little sweet spot. I think you could probably look for something, but you want to look for that ABC. You want to look for that ending C wave, and when that comes back above the A, that could be it. That could be the dip. So again, bigger picture in mind, let's look for some ABCs. And I think, as painful as it is, we stay in this game, boys. I'll see you guys in the next one. Just looking at these charts one more time, and I spotted another tidbit. So in the gold at SPX ratio, you also had this back in the 94 era. And if we zoom in here, I just want to make people aware, like, this also did poke its head out a little bit and then rolled over. It still had a kind of a rounded formation here, but we also just need to be very, very cautious that if this starts to happen, SPX is going to take over for the foreseeable future. So just wanted to point that out as well.